I'm Amy, Head of Learning and Development and Support at TradeChill.
Welcome to everyone to our Credit Thursdays. My name is Amy, if you have not joined us before, and I'm delighted to have you join us today. So today we're exploring a topic that sits in the very heart of, a good credit practice and good credit intelligence. So not just the data itself, but where do we find it? How do we use it? How do we transform this raw information into confident, defensible credit decisions? So that's what we're going to be focusing on today. And even though we are from TradeChill, this is a non-TradeChill specific session, and it's just, taking everything that we know as credit people and making it work for us. Okay, so the agenda that we're going to be going through today is, a practical agenda. We're going to start by defining what credit intelligence actually means, because it often is a misunderstanding as to just a credit score or a single credit bureau report. And then we explore the distinction between internal data that you already hold and external data that you may need to find, as well as why do these both matter. And the heart of the session is the detailed tour of key sources, categories like statutory information, bureau information, financial information, online intelligence, and legal records. And then we will cover how to validate or cross-check this information that you find. So before discussing how you convert this information into a credit decision. Okay, so we close. Sorry, alarms just started going out. Hopefully it's not mine. We close the most common mistakes practitioners make when relying on incomplete or misleading data. And these are real patterns that we see on a regular basis. So questions are, of course, welcome throughout the entire session. And so you can either raise your hand or pop something into the chat bot and then into the chat, and we will assist you while we go. Or you can wait all the way until the end. Either way, it is absolutely perfect. We are, open to it. Okay, so let's jump right into it. What is credit intelligence? Okay, so let's start with the foundations. And what do we actually mean when we say credit intelligence? And in terms, this is easy to misuse the term because intelligence could require, your brain thought or it could mean AI today. But many people equate this to, with a bureau score. Once I have a bureau score, I know what I'm in for, or a credit limit recommendation, or a single report that we pulled from a bureau. But that's only one teeny slice of the entire picture. Credit intelligence, to me, is the full picture. So structured, validated, interpreted information that allows you to assess who are you dealing with, what is their financial position, what does that position look like, how have they behaved with other creditors or with yourself, and the context behind their current request. So we often talk about why are they asking for this information? Why are they asking for this amount of credit? If it's different from what they have used before. Maybe it's a good thing. Things have changed in their industry, in their business, and so there's room for growth, or there are red flags going off, red bells that should be going off in your mind that tell you that we should be asking these questions. So think of it across 4 different dimensions. So the first one is who. Who is the entity that we're speaking about? Who owns this entity? And who are the directors of this entity? And is this entity, a registered entity? Are we dealing with a trust? Are we dealing with a partnership? Are we dealing with a sole proprietor? So who really owns this? And I know we've come across this before where somebody mentioned, they had a trust, who owned a trust, who owned a trust, who owned a trust, who owned a trust. And by the time you got to who actually owned it, it was completely so far removed from the actual company itself. So that's the who. Then we want to know about the what. So what does the financial position look like? What's their profitability? How cash strapped are they? Are they growing? Are they shrinking? So that is the what. Then we get to the how. So how have they paid others? Are they on time? Do they pay slowly? Are they constantly paying late? Are they paying on time? Maybe they pay early. Things can be surprising. And then we get to the how. So, not the how, the why. Why are they requesting credit now? Are they a new customer? Is it seasonal? Is it a cash flow stress? And that is why they're moving from COD into credit, or is it just better for business? So the goal that we're looking for over here, which is what we're speaking about, I can get my little pointer going on here. The goal that we're looking at over here is the credit intelligence. It is not simply to approve or decline someone. It is to make a decision that you can stand behind. So if somebody comes to question you, why did we make this decision? We know why we made this decision. So on the balances, the commercial opportunity, the measured risk, is it consistent with your policy and protects the business relationship where possible? So making sure that we're not recklessly lending, which is something we speak about all the time. And then, of course, poor decisions, both approvals and rejections, often come from incomplete intelligence or, not just bad judgment or I was having a bad day, but you may have rejected somebody that could have potentially been a great customer, and or you may have approved somebody who turned out to be not such a great customer. So when we move on to the next slide over here, there are two pillars that we speak around for the credit intelligence. So before we deep dive into the specific sources, I want to establish an important distinction that many credit functions miss: the difference between internal and external intelligence. So internal data, which is very important, this is the information your business holds. It is often the most honest signal. So if this is an existing customer or a previously traded customer, then this is where you hold majority of the data, and this is very, very powerful. So how long has this customer taken to pay you historically? This is information that you have. Payment history. Have they frequently disputed invoices, causing delays into why they pay? So are they, buying and then constantly having to say, no, actually, something was defective, or, we're raising issues, asking for credit notes. So these tell us, is there something going on in this business? Okay. So the next one we want to look at, has their order volume grown or shrunk significantly? What is the sales team telling you that doesn't appear on any report? So your team, hopefully you have a good communication between your sales team and your credit team. So what is happening on the ground that we're looking at? The internal history, this is gold, and it's your business's live experience with this particular customer. So many credit controllers, they underweight its favor of external reports. In other words, they take what's happening outside of your environment more seriously than what's happening in your environment. And so I would say that we should switch that around and say, how is this customer behaving with me as well? External data, meaning anything that is outside of your environment, where we source things that are from outside of your environment, things like bureau reports, statutory information, financial statements or bank statements, trade reference information, if you can still get it, online sources, legal records. These are all essential for new customers or, for seeking signals that your internal data can't reveal to you. You're not going to have live data to see that they're still in business or that they don't have judgments. So this is where the external section comes to play a part. And the most powerful credit decisions combine the two together. So it's not just one or the other, it's the two together. And a customer with a perfect bureau score, which happens, but the pattern that we see in terms of their behavior with you is slow, their payments are slow, and it does require your scrutiny. A customer with a thin, if you want to call it thin, a thin bureau file, but 5 years of a perfect payment record deserves also consideration, to say maybe the bureau report is saying that there is a higher risk because there's only one director. Maybe that director is slightly older, but this customer consistently pays you on time and is actually a good customer. There may be some room for, considerations as well. So never just relying on one source alone. Credit intelligence is always looking at the mosaic, everything that we have together to make a piece and a beautiful picture before we make that decision. So how do we do that and where do we do that? So the key sources that we have are these 6 essential categories of credit intelligence. So let's look at it from a practical perspective. So we're going to walk you through the 6 categories of external credit intelligence, and in the next slide, you'll go through the details of each one. So the 6 categories represent the full toolkit available to most South African credit practitioners. Now, obviously, if you deal with companies that are based outside of South Africa, it does start to get a bit more complex, as we do have a good structure in South Africa with regards to registered businesses and even sole proprietors. So, apologies, I'm just going to admit some people over there that have joined us. Okay, so the first one that we have is the bureau information. So over here we've got the CIPC and what we refer to as statutory information, which is information that doesn't necessarily change on a regular basis. And so you will see that we look at the CIPC statutory information. Okay, and this looks at who the entity is, who owns this entity, and it's the compliance history that we're focusing on here when we're looking at that CIPC statutory information. The next that we have is credit bureaus and or trade data. So payment behavior and risk scoring comes from dedicated bureaus. And there are multiple different types of bureaus, and we'll go through those different bureaus in the next slide. The next we look at financial statements and or bank statements. So this is looking at financial health of the business. Then we've got our online sources, and these are constantly growing. So online sources looking at Google, websites, LinkedIn, social media platforms. Those would be our online sources. We've got our legal and court records. So we're looking at judgments, liquidations, sequestration, and then we've got trade reference information. So this is direct feedback from other suppliers. And as we go through each one, I'll highlight what you can realistically find, where you can find it, and what to watch out for. So the key principle here is no single source is sufficient, and your job is to build the picture across multiple sources and identify where to, where each one contradicts each other. So let's break it down now. Let's start looking at CIPC. So this is the statutory information, and CIPC stands for the Companies and Intellectual Property Commission. Okay, so that is what the CIPC stands for. And this is the baseline for all South African registered entities. So before you go elsewhere, this is where you need to begin. And actually, this is a free site that you can go and log onto. And the site, you can either go via CIPC, or there is actually the BizHub portal as well, where you can log on. It does require you to register with your ID number, just so that you know, and so you can then access this information. So this is what we consider, live information or publicly available information, which means it's available to everyone to go and see. So the registered name and the company number let you confirm that you are dealing with a real registered entity. So you'd be surprised at how often trading names differ from registered names. So I can go and register myself as John Smith Incorporated, and on the door I can put Amy's Cakes. So that's the difference between a trading name and a registered name. Okay, so we need to be asking these questions as well. And just so you know, a trading name does not need to be registered at CIPC. Sometimes companies do put their trading name, but it is not a mandatory field on the CIPC website. So that is good for you to know. So you can ask, what is your trading name versus what is your registered name? And this tells us, how, the registered names, and occasionally how often fraudsters use similar sounding names as well. So fraudsters can go and register a business that sounds very similar or looks very similar or has a dot or something like that. So we need to make sure that we're looking at them quite closely. Directors and their ID numbers are also critical. So you can see who is currently the director, who has resigned, and when they resigned. You can also see any cross references, so those directors against other entities, to spot any patterns such as, is this person opening and closing multiple different businesses, which could mean that they are running away from probably paying bills. That's what we generally see. And then we've got the company business status. So this tells us whether the business is active, deregistered, in business rescue. And so we, of course, never want to extend credit to somebody who is a deregistered entity, as there's no legal standing for us. In other words, if this person were to default on payment, and we wanted to go and take out a judgment against them, the court is going to ask around our due diligence, and the due diligence is around, did we follow up and make sure that this information was correct, and that this company was a valid business. And what actually happens is somebody was a valid business, and then they move into a state of being a non-valid business. And a notification actually does go out to registered credit providers, in other words, like banks, banking institutions, or loaning houses, to tell them, don't do business with this company. They're no longer in business. But because the industry that we're in, which is mostly B2B credit, where we're not necessarily credit providers because we're not providing them with cash, but we're providing them with services and or with product, therefore, we don't get that notification on a day-to-day basis. So we need to go and check that information. Then you've got your annual return and compliance. So this tells us whether the company is keeping up with their legal obligations. A company that hasn't filed their annual return in more than 3 years is therefore no longer actively operating. And CIPC would actually go and make a note to say that they deregister this company. And how we can see that is they put an AR in front of the business status. So AR stands for annual returns. And so that shows us that CIPC is the one who is initiating that process. So multiple director changes in a 12-month period can indicate, these are some of the red flags that we're talking about now. So multiple directors in a 12-month period, this shows us instability, maybe disputes and or even fraud. A director who appears across multiple different deregistered or liquidated entities is a serious risk indicator to tell us that this person is actually a bad business person. So potentially we do not want to continue doing business with them, even if this business is in business. We get that question often to say, well, why are we penalizing them on this business that is in business? But we're saying the director is not a good business person, and all their other businesses seem to be having issues. So therefore, you want to ensure that we're following what things are telling us. It's blatantly obvious and in front of our faces. So we see that filtering down, that history does depict where we're going to go. So registration address that does not match the trading address also warrants an investigation. Why do you sit here, but your delivery address is there? And this will, of course, lead us into one of the other 6 topics that we're talking about, which is Google. Go and look on Google Maps. What does it look like at that delivery address? Okay, so a practical tip here is CIPC searches are very inexpensive and should be mandatory for every new credit application. So some credit bureaus do provide the CIPC data for you in their reports, but you can also go and have a look at it yourself. So as I said, it is free to register on the BizHop portal, and you can go ahead and search all of this information on that portal. So let's move on to the next one, which is around credit bureaus and trade payment data. So here we're looking at, source number 2, what most people think of first is credit bureau report. So in South Africa, we have several major credit bureaus serving both the consumer and the commercial credit markets. So for business credit, the most commonly used are obviously, I'm going to go with Inoxico first, TransUnion, Experian, and XDS. We've got Dun & Bradstreet for international entities. So there are quite a lot of different registered bureaus in South Africa. You also have the other side of that, which is people who purchase data and they resell their data as well. So we do have companies like that as well in the market that are buying bureau data and then repackaging it as well, but they themselves are not registered bureaus. So what do they give you? So there's the credit score. So this is a risk weighting score based on payment behavior sometimes, and understanding the score model of that bureau uses what we would say is our score range for us, and they would differ. And so if you think about a score and or a model is saying, if I were to take a bunch of different information, how much does this information weigh? In other words, how important is it? For example, is financial information versus how old a director is, where do they sit on the scale? Is it more important to have somebody have the affordability, or is it more important that, the director is not 12? Okay, so we have this weighting or the scale process that says, if we take all these different data points that a bureau can put together in a report, where does it sit? Right? And they generally then reflect this in a score. Some customers and or some bureaus have scores between 1 and 100. Some are 1 to 6. Each bureau will show you that information slightly differently, but essentially we're all looking at the same stuff. And so the payment profile information, some customers and or some bureaus do look at this to see how do you pay your accounts. And so also due to Poppy, it has become a little bit more complicated for them to give you that information. But then we also look at adverse listings. So this is defaults on payments, judgments that have come, dishonored checks if they still use this information. And these are serious signals that should prompt further investigation. So just to clarify, adverse listings is bureau specific, not agnostic. And what I mean by that, if somebody goes to, for example, Experian and lists them as a bad payer, then I will come to the question in the chat in a second. So if somebody lists somebody as a bad payer on the TransUnion website, it will not filter through to the Experian website and or the Inoxico website. And the reason for that is it is bureau specific. It's not public information yet until it becomes a judgment. So until such time, it is specific to that bureau. So just want you to know, we do have these questions, or we used to have these questions. Why, when I pulled an Experian report, did they have a listing, but when I pulled the TransUnion report, it didn't? And the reason for that is bureau specific. So I see we've got some chats, some questions in the chat box. So CISO asked, I assume that this is one of TradeShield platform's checks, CIPC and statutory records, and this is calculated in our recommendation. And to answer that, absolutely, we definitely do take into consideration, all this bureau information. So the bureau that we currently use for our business to business is Inoxico, and for sole proprietors, we use a company called VeryCred. And so we do take into consideration all the information that they have, which does go into our scores. So I hope that answers, as I think it's CISO's question.
CISO, and it was one of the first people to put it on the Q&A side, so I didn't spot it.
Thank you. Oh, no
Thank
problem,
you,
no problem at all. And I can see you. Thank you, Neil, for posting the common business statuses as well for us there.
Sure.
Okay, so that's the different adverse listings. So what is a listing as well? So listing goes and says, this customer hasn't paid me. Now, I know on the Inoxico site, you can go and list your credit, your data. And what happens is the site will then prompt them for 21 days. It sends them an email and says, hello, Mr. Customer, you have an outstanding account with so-and-so, and if you don't pay your account within 21 days, you will be listed as a bad payer. And then after 21 days, if that listing has not been removed, it then sends a notification to everyone who requests a credit bureau report on that particular customer. It also then, every time you pull that bureau report, it will tell you that this person has an adverse listing. And an adverse listing will remain on somebody's account for at least 12 months. It can then be re-put on by the company if they haven't yet received what they're looking for. And so they can then go ahead and re-put that on there. But obviously, usually after a year of not having received payment, you're either going to write it off as bad debt, or you're going to take out a judgment, in which case judgments are public information, so all bureaus should have the same information in terms of it all usually comes from one particular company that goes to the courts every single day and has a look at all the different liquidation applications, business rescue applications, as well as any judgments. So that should be pretty standard, as well as with TradeShield. So we as well do give you that information as well. So trade data. So some bureaus do aggregate trade, payment data, and how long businesses take to pay their suppliers. And this is extremely valuable. So I haven't really seen too many bureaus leveraging off their data as they should. And I think this is what makes TradeShield very different from that of a general bureau, where we are aggregating payment profile information across multiple different companies. So even if we look at the TradeShield base, we receive hundreds and thousands of lines of debtors aging every single day. And we have approximately, I think the last amount that I saw was we look at 400,000 individual companies on us every single day, which makes up approximately 6% of South Africa's GDP that runs through TradeShield. So we do have quite the advantage of seeing so much information around payment profile information. So, and part of our goal within our company is to grow that as well, so that the more data we have, the better we can service our customers. So payment profile information is hugely and vastly important. Of course, you have to be careful that nobody's sharing data. So they're not saying Amy Price is trading with Neil and she doesn't pay Neil on time. We don't want to see any of that information. Okay, so some advice. So for commercial limits above your thresholds, run at least 2 bureau reports if you're still using bureau reports, and get the coverage and the data freshness at least twice a year at the minimum. So if you're doing reviews, you should do it at least twice a year on your larger companies, and so once every 6 months. And for those that are using a platform like TradeShield, then of course we're doing this for you, but we would recommend that if you're still doing it manually, that you do it at least twice a year on your very large companies. Know your bureau data. So update your cycles. Stale data gives us false comfort to say, when I did do this information, I pulled the report, everything looked wonderful, but that was 5 years ago. So stale data is a huge risk factor to us. And then, of course, a score alone is not a decision. So read the full report. And we do encourage this. In fact, we can pop a little link to you as well to say, what do we recommend that you check? Don't just rely on that little number at the top. Read the information, read read what is being given to you so that you can make a sound decision. So now we get to the next portion here, which is the financial statements and the banking information. So source 3 is where the credit analysis gets very technical, but it's also more revealing when financial statements and bank statement information. So what to request? This can be directly to you or via a bureau or via a platform like TradeShield. But if it is coming through to you, then what you're going to want to request is, for significant credit limits, you should be requesting at least 2 to 3 years of financials, annual financial statements. And I'm just going to say that this should be signed by an auditor. So this allows you to see the trend, and this is, the business is growing, it's stable, or is it declining? And there's a lot of information that we're going to want to have a look at over here as well to say, as I mentioned before, we recommend that the financials be signed by an auditor. And the reason for that is anyone can put together a financial statement that isn't being checked by an external person. So I can say whatever I want, and it's not being verified or validated. So make sure that you at least have some financials that have been signed by an auditor. And of course, we understand it only happens once a year. So let's say, for example, we're in April now. So most companies have done a financial year end in February, and they're now still busy with that process. So if I were to ask for financials, I may only get last year's audited financials. So you can then ask for management accounts to accompany those financials. So very important to say, I at least need to see something signed by an auditor, as management accounts tells me where am I up until this point, but they are not signed by an auditor. So management accounts, just so you know, are not signed by an auditor, but you would very quickly, hopefully, be able to see if you said that your revenue was this last year, but your management accounts are saying this year, and if they don't come anywhere near each other, then I would wait for the additional financials to come in or give a lower limit matching that of what the financials said last year. So particularly accounts, or AFS is what they stand for, the acronym that is used in the business, which is for the annual financial statements. And this should be around 12 to 18 months old. So be aware of anything that is unaudited and or older than that if they say that they can't give you anything that is newer. I do want to point out that we do have a country, I think it was Somalia or Ethiopia, I need to check, that actually runs on a different year to the rest of the world. So they're actually still only in 2019, and that is their most valid year. So we should also check, is there something about the country that we're dealing with that tells us that things are slightly different. And it is quite weird that they're still, in the past, and they'll get to 2026 eventually, but they're still, I think, in 2019 at this present moment. So have a look at that if you do deal with any international business. 3 months worth of bank statements is an extremely valuable portion as well. So if they can't provide you with financials, but they would provide you with 3 months bank statements, this is used mainly for smaller businesses where, maybe they don't have audited financials because they're too small. And so bank statements can show us what is the real cash flow. And so we're not accounting for profit, but really what is coming into this business, what is going out of this business, when is it coming in, because we're looking at that head time. And we also want to make sure that we are looking at, a full 3 months gives us a good picture as to what that cash flow looks like. And or if we're seeing some interesting payments coming in, for example, if they're being supplemented by a director or an external company where we're seeing large amounts being deposited into the account, which means that they're not yet self-sufficient. So at that point, we may want to then ask for a surety document to ensure that if something doesn't get paid, who are we going to then refer to? Okay, so in terms of what we want to do the analysis on. So what do we analyze? So on the financials, we're going to want to look at things like revenue trends, gross profit margins, net profit, liquidity ratios. So can they pay short-term obligations, which is what they usually are doing with you, and their debt levels. Are they highly, indebted business, or can they look like they are profitable but be unable to pay you? In other words, their money is tied up elsewhere. And some companies, as of today, they're not really working towards profitability, but really working towards growth. And so that's important as well, is that they're working towards growth. So on bank statements, we want to be looking at consistent inflows. So we want to make sure, first of all, that it's a transactional account. The average balance, so not just the closing balance, but the average balance that's returned over, return debit orders. Do they constantly go into negatives? So these are things that we may want to then look at. Do they constantly use an overdraft facility? These are signals of payment failures or cash flow issues. So any unusual large amounts that are either being withdrawn or deposited, these are also things we're going to want to look at. So a critical note here is always establish the level of assurance. So audited financials carry the most weight. Reviewed AFS can provide moderate assurance. Compiled AFS, meaning these reviewed and compiled means they have not been checked by an auditor, are based on information that is provided by management only and carry no independent assurance. And so you need to know what you're reading. That's very important. And many businesses are reluctant to provide this information, which of course we know about. So your credit policy should then specify what is required at what limit. And this is important for your business to say, according to our company, we require audited financials if the value is over a certain amount, and we will not waver on that. So we understand, Mr. Customer, maybe you want to provide it directly to our vetting provider, whether that be a credit bureau or someone like Trade Shields. Maybe you don't want me to see it. That's one thing. But if you don't want to provide it at all, why not? But on the flip side, you all work for companies, you all take out credit yourselves. Also be open-minded to sharing your financials with businesses so that, you can't expect someone to share them with you when you yourself would not share them with somebody else. And so it's important to note that, the more open-minded we all are, then we can therefore change the industry to say, audited financials should not be kept a secret. There's nobody's personal information on there. It's really, you're asking for money from my business and I need to know that you're going to be able to pay me back. So now we're looking at underused digital intelligence layer. So this is source number 4, and the most underutilized areas in the credit assessment is the online intelligence, especially where we are today, where so much is accessible to us. So many credit practitioners run bureau reports and then they stop. But a 10-minute online search can surface more information than a bureau would ever be able to give you. Some bureau reports do give you links to social media, for example, but you may want to then go on yourself, go onto Google and say, don't just search for the company name, but you may want to look at things like complaints or reviews or fraud or scam or liquidation. So you put that in with the company name to see if anything comes up. I haven't myself looked at this in a long time, but there are websites like Hello Peter where people constantly complain about a business and or give compliments. It's not only about complaints. So you're going to want to search the directors' names as well. You may find news articles, court case summaries, forum discussions that are highly revealing. So you're going to want to take not just the name of the company, but you may want to use keywords, and you may also want to look at those directors as well to see if there's anything like sanctions. Maybe they've been listed on the SAPS website, which you can also go and have a look at. You can go and have a look if the company has a website. If they do not have a website in the 21st century, that for me is a red flag, because any person, even with very limited technical skills, can create a website today. So this just shows us how professional is the business. Is there clear evidence of trading activity on the account? Like, is there any postings happening? When was this website created? Do they have any information that's being updated? Do they have privacy policies that should be on their website? And when was the last updated? So a brand new website for a 20-year-old business is also a red flag to say, if you were registered 20 years ago, why did you only create an account or a website now? And usually if you scroll down to the bottom of a website, it does give you this type of information. Then we've got companies like LinkedIn. So LinkedIn is surprisingly useful, and for a commercial commercial credit, we can go and have a look and see the directors, their key management exists normally on LinkedIn. So where their profiles are consistent with what appears on the credit application, or whether the company's page shows active employees, mass staff departures. This can all give us an indication that a business is in distress. We're going to want to go onto Google Maps. We want to go look at Street View, and we're going to want to verify the physical trading address and or delivery address, that there is something there. As I said, we've had often people say that they got a delivery address that was different to the registered address. They Googled it and it turned out to be like a little open field with somebody's caravan there, And so that's something you're going to want to check out as well. So is the business residential? Is it now registered to a house? And does a house make sense? We had something that happened to one of our customers where they had a meeting in a hospital, in a boardroom, with a person who happened to have just actually walked into the hospital and located a boardroom. They then went back out, waited for their customer to come in, led them through to the boardroom and said, the hospital has now decided that we're going to be doing bulk purchases for our hospitals, and you're going to deliver the stock to one centralized place where we will then mass distribute it. And so they delivered the stock to a random warehouse that had nothing to do with the hospitals, no signage whatsoever. And of course, it was completely fraudulent. And by the time they figured it out, that person was no longer anywhere to be found. So we're going to want to Google, what does this property look like? Okay. Then we've got, as I said earlier, we've got some review platforms such as Hello Peter in South Africa. We've got, that also is there for consumers. We've got consistent complaints for non-delivery, refund failures. Quality can signal cash flow problems as well. So online intelligence in context, it's not evidence, but treat it as a signal to investigate further. So it's not necessarily making your credit decision for you, but it is giving you some insight. So these are all things that are available for us to go and do ourselves. And we should go and do this. You can even go onto a ChatGPT, a Claude, one of these AI platforms, and ask questions as well. Has this person been linked to any sanctions or any criminal cases as well? that you may want to investigate. Okay, so we move on now to the legal and court notice records. So this is source number 5, and this portion of our intelligence is often the source that separates good credit assessments from a dangerous one. So judgments, and I know Martin, if he was here today, would tell you about his feelings around judgments, but a civil judgment means that a creditor took the debtor to court and they won, or they are currently still in progress, and that the debt was not paid. So judgments are public records, and I emphasize the word public records. So if somebody says, no, this is an infringement of POPI, they are incorrect, unless the judgment is against an individual in their personal capacity. We can tell you that there is a judgment, but we can't tell you for how much and who is the plaintiff. Okay, so that's just important to note from a director's individuality where we sit with that. Okay, so bureaus, they do provide us with judgment information. And so there is actually a company that goes, I'm trying to remember their name now. I don't know if you remember their name. So Courtworks, that's right. Thank you very much, Neil. So Courtworks is a company that goes to the different courts and collects this information and distributes it to all the different bureaus. Multiple judgments show us something that is, quite important. If you have one judgment, it may have been a dispute that then escalated. But if you've got multiple judgments, then, that's also telling us what's going on in your environment. But what I do want to make sure that you know is that a judgment is a very historical way of looking at something. And the reason I say that is by the time you see a judgment, it's probably a year after this person has defaulted. And I say that because if I think about a regular business, somebody doesn't pay you. So let's say they go 30, 60, 90 days overdue. After 90 days overdue, you're, as a business, is probably going to phone them. You're going to try to speak to their directors. You're going to do what you can internally first. Then you may go to a bureau and list them as a bad payer. So you give them another 21 days to pay or 30 days to pay. So now 120 days plus late already. Now we're going to try and get this information from you. We may then reach out to an external provider or a debt collector to go and get this, to try and collect the funds for us. Or we are credit insured, and the credit insurer is still going to try and collect this information and may take out their own judgment. But at this point in time, we are now, 6 to 7 months down the line. And so we then may want to then start the legal proceeding. And of course, our lawyer doesn't go straight to judgment, but they're going to threaten them first, and then they're going to go through to the judgment. So we're looking at like a 9 to 10 month now after the default has taken place. And by the time you see it, it's probably, almost 12 months later. So it is a historical way of looking at something, but it does tell us that if somebody got to the point of frustration to take out a judgment, do we want to be one of those people as well? So bureau coverage on commercial judgments is not always complete. So for high value accounts, consider a dedicated legal data search. So you can go and search yourself through companies like LexisNexis or your bureau's legal services as an additional add-on. Again, a lot of this is public information, and you can pop this into, to the account and you can have a look at it. Yes, I see Jane has a question. Neil, is that what you want me to look at?
Correct.
Okay, perfect. So does Inoxico track active court cases? If yes, this noted on their reports. If not, how is this information taken into account on the score? Yes. Okay. So yes, absolutely. Inoxico and Tradeshield do track the active court information. So what you'll notice is the only way to remove a judgment is to provide the Courtworks company that is responsible for making sure what is active and what is not active. They need to provide a stamped by the magistrate a rescindment to say that this court judgment has either been paid, this judgment has been removed because either the person paid or it was withdrawn. So we will not remove judgments if somebody just said, no, but I paid it and here's my proof of payment. That's not good enough. It needs to go to the court to finalize it, and a rescindment document needs to be provided. So it can either be provided directly to a bureau and or it can be provided directly through Courtworks, and then it will be updated because the Bureau will then reach out to Courtworks and show them that rescindment document, and therefore it will be removed, or Courtworks themselves will pick up on that rescindment document and they will remove that judgment themselves. A liquidation application, I just want to make a comment on a liquidation application.
Before we continue, Ames, Jane put another follow-up in the chat. She's saying, no, not judgments, but pending litigations.
Pending litigation. So pending litigations is difficult. Sorry, Jane. It's difficult to track that live because it's not publicly available information. So if there is a judgment, we will see it. If it is an active judgment, we will see it. But we can't see the actual litigation going on in the background. It's not information that's provided to us. What you are able to do is you are able to contact the person that is taken the judgment out against them and ask about this information. So that could be one step your team could take. But unfortunately, it's difficult for us to get that information as it would sit directly with the attorneys. I hope that answers your question. Okay, so liquidation and business rescue. So these are published in government gazettes and are on CIPC. If a business is in formal liquidation or extended further credit, it is likely that the result is in a loss. And business rescue is more of a nuanced situation to say some businesses, they do emerge successfully, which is what we hope, but cash flow is constrained during this process. So if you want to trade with a company that is in business rescue, because we'd also like to see them succeed, but do so on a COD basis, okay? As well as any type of, so if there is a liquidation application, so this means that somebody went to court and said, liquidate this business so that you can pay me what is owed to me. A liquidation application will sit against a company unless that company goes to court and has it removed. So whether it was successfully granted or not, it would still sit against their name. So very important that you may see an old liquidation application, and that just means that the company did not go to court and prove that it actually never went to fruition. Okay. Sequestrations, we're talking about this obviously in an individual capacity. So we're talking about a sole proprietor is a sequestration. So if you take out any personal surety from a director, you will need to verify that they are not in a sequestration status of theirs on themselves. And a sequestrated individual has no legal capacity to provide surety. So if you have them sign it, you should definitely do a check on that person to make sure that they are not sequestrated, which means they also can't provide any credit and or any loans for at least 10 years. So very important. So pending litigation, this was part of the question earlier. So this is harder to find, but worth checking for large exposures. So significant pending litigation, particularly with the defendant, they can threaten the business continuity. And the only way to do that would be to reach out to the attorneys, which is usually part of the judgment as well. So I just wanted to say that you would see normally who the attorneys are on that judgment. So you'll get a attachment for that. So on a practical note, so most credit bureaus include some legal data. They do understand what the bureau covers for very high risk or very high value accounts. It's very important that we make sure that we do all of the the searches that go with that. So I would recommend that you do that as well. Okay. Let's just see here, your block pending litigation. Sorry. I'm saying track active court notices. So you were referring to my block. Sorry, I hadn't gotten there yet, and I was focusing on one portion of my screen. So it is hard to get that litigation information, but I would then reach out to the attorneys. Most of the time when you do get a bureau report, there should be an image of that judgment as well. So that's where you would find that information. Who's the lawyers, who's the plaintiff, and you would be able to see all of that information. Of course, if it's a very small amount, don't go through all that trouble. Or at least I wouldn't go through all that trouble, should I say. Okay, so the next one that we've got here is don't accept a single source of truth at face value. So we want to be validating and we want to be cross-checking. So gathering data is only half of the job. The real skill is in the credit intelligence and in its validation. So checking that what multiple sources tell you, and then deciding what you're going to do with that. So let's go through how the 6 validation practices that we've talked about. So we've got our cross-reference identity. So does the name on the application match that at CIPC? Do the directors match? Fraudulent applications often contain small inconsistencies, like a slightly different company name, an ID number that doesn't match. And I have seen this actually very recently on a fraudulent account where the person filled in ID numbers that didn't match in 2 different places on the application. So they're caught through like the cross-referencing of their own mistakes. And so we're going to want to go and have a look at that. So compare the bureau data to their payment history if they are customers of yours. So if the bureau gives them a good score, but they are constantly paying you late, then you're going to want to have a conversation about this. You want to verify those addresses. So this is the basics. So often, and it's often skipped to say that we're not verifying it via Google with Google searches. We're going to want to call trade references. We want to maybe call those plaintiffs as well, or the attorneys. Pick up the phone. That is the best way to go about it. Pick up the phone. You may get pushback from a trade reference to say, due to confidentiality, we can't tell you, or it's against our company policy. But you want to make sure that maybe it hasn't been fabricated or they've just cherry picked the right ones. So you can ask, what is their credit limit with you? What is their average days they take to pay you? And have they ever put them on a stop of supply due to whatever reason? So you can try your luck with those as well. Reconciling your financials, so making sure that, if your AFS declared 10 million in an annual revenue, but the bank statements showed 200,000 in monthly inflows, it could be that they have multiple bank accounts. So again, you're going to want to check that. You're going to want to check overdraft facilities. And if something doesn't add up, it's usually because, it's either incomplete or they've only given you half of the story, the half that they want you to see. And then document everything. So write down everything that you've searched, when, where, what it showed, what decision you made, and why, so that you create that audit trail. And that's really important. So everything that you do as a team, you're going to want to make sure you write it down. And then we're going to want to go and say, maybe we're going to create a scorecard for ourselves or a tick list for ourselves, turning that data into actionable insights. Okay, so gathering and validating the data is useful, and it leads to a clear and defendable decision. Why did I make this? When that auditor comes and says, why did you make this decision? And if you do use TradeShield, you'll see that there is a comment section. You're going to want to put all of this information into your comment section. If you use paper-based information, write it down, scan it, and save it to make sure that you have put together your scorecard to say, I agreed to this because of. And it's a simple weighting of each intelligence factor that you can build for yourself to say, the scorecard, the bureau report, maybe my credit insurance as well, the payment history and all of that. What do I see as the most valuable to me? And then must have. So before you score anything, identify the, must be verified and entity must be in a good legal standing. So those should be what we refer to as the knockouts, that they have to be in business and there has to be some affordability, okay, before we pass or fail anything else that we've looked at, okay? So you're going to want to weigh that up, and I see that we do only have 3 more minutes, so I'm just going to jump into the last slide and say, what could possibly go wrong? And that is to, let's close the content portion by looking at the most common mistakes that we see when credit decisions are based on poor or incomplete intelligence. So these are some real patterns that we see. So mistake number 1 is looking at the score alone. So a bureau score is a model. And so we want to make sure that we're not looking at only one thing, and it does not show, it doesn't tell us what to know about like the verbal commitments that may have taken place with your sales people. Maybe there's been a disputed invoice that's been there for 8 months. Bureau information and the scorecard does not have that insight. So you're going to want to make sure you're looking at it. Yeah. Skipping out on CIPC. So this is, hopefully I haven't ever seen this, but some people do skip out looking at the CIPC data. And this is a common repeat of applications or account reviews. So always re-verify your information. One of the things we see often is people ask for a CRO document or a company registration document, and everything looks good, it says it's in business, but they don't look at the date that that document was provided. So it was generated 5 years ago. That does not mean that it is valid today. So please look at the date of your company registration documents. Written references. So this is, very easy to fabricate. A written reference, literally anyone can write it down or ask their mother, brother, sister. So make sure that you are going to pick up the phone and verify this information. Call the landline and ask to speak to the person that they have put as the reference. Don't call cell phone numbers because it could, again, be absolutely anyone. Call the landline. If there is no landline, then again, we have to raise an eyebrow. Why not? And then we may want to send a salesperson to their property to physically see what is going on at their property. So compiled versus audited AFS. So we want to make sure that we're looking at signed, audited financials and not just something that has been put together by management. Skipping the online side of things. So in many cases, we forget to look online, but this is where majority of the information that we're looking for is going to be, where somebody has been, investigated or listed as a negative person or has complaints against the business. So making sure that we're looking at that. And of course, not documenting. So if we don't document everything that we've said, we're going to need to back up our decision. Why did you say this? And so if you do have any bad debt that takes place and we cannot explain what you checked and or what was exposed at the time, it's going to be quite complicated for you to then justify why that decision was made. And if something does turn sour, we're going to want to refer back to it. So in closing and understanding, apologies that we have reached 11 o'clock already. And of course, you can always reach out to us at support if you have any questions. We will post this in our knowledge center for you so that you can go ahead and read these slides as well, put them into your credit policy, make a little tick list for your credit controllers who are going to be checking this information so that they make sure they are documenting their portion and not only on the approval side as well. So have a look at these key takeaways that we're going to want to follow. And of course, we thank you always for joining us on a Thursday, and hopefully you found some value in what we've provided you today. And we look very forward to hearing from you and working closely with you. And we'll pop that support mailbox for you in the chat as well, for just in case. Otherwise, I hope you have a wonderful Thursday, and we'll see you again next week, Thursday.
Thank you, everybody. Thank you, Amy. Perfect timing. My fire alarm is going crazy. So thank you so much, everybody.
Run, Forrest.
Join us every Thursday from 10 to 11.